What's going on, believers? It's your boy Rebalance with another live price example on this beautiful Monday. I'm not a investment consultant, financial advisor, or anything of that nature. I do not claim to be, right? This content here is strictly educational and entertainment. Please do your own research. There's risk involved with trading live funds. Now that that's out the way, if you recall from my Friday recording of live price example featuring Fed Chair Powell, this was the trade setup here, utilizing this area inefficiency here on the 15 between these two green lines. And my stop loss initially on this position was here at this 15-minute inefficiency. Basically, the idea was if prices to continue lower, I would be targeting this daily inefficiency. And I just want to clarify which one this is. This is not the one that we had been bouncing off of here. This is the one that we were rejecting from, and we finally were able to break through it. And so that's what that one is. Because I know I said that it was the one that we've been bouncing off of. I misspoke there. This is the one that we finally traded through, and it could act as support for price. But now just getting back to the 15-minute. So that was my target to the downside. If it was to right pick up some energy and trade lower, I was mentioning how it was potentially going to be a seek and destroy type of conditions, which is what this is, in my opinion. Anytime I see price up and down, very volatile, that to me is seek and destroy. I mean, there's a lot of people that try to chase it lower, and then they got beat up as it whipped higher. A lot of people trying to chase it higher, and they got beat up as it whipped lower. You get the idea. So today, what, and just lasting on that trade. So it was actually up as far as I'll speak from a perspective of units. Let's say that each individual in this business has 100 units and they risk accordingly based off of their own sets of rules and things like that. So let's just say, for example, for this trade, there was 1 unit risked, and each multiple of reward of that unit gains a unit, basically, right? So the risk here, this range, which is you see that number at the top, 5.75. So there was 1 unit risked on 5.75 points of movement. So every 5.75 lower that it goes, that's an additional unit added. And so just to kind of look at it from that perspective, so 4205.25 is the entry, and 5.75 is how many points, right, equate to a unit. So from 4205 and a quarter to the lowest it's gotten so far, 4186.50. So that's about what, 15 and 3/4. So almost 3 units gained, less than three, but almost 3 units gained from the movement lower from the entry on that trade setup. So in my book, that's a win. If it were not Friday, and if it were not just this trade being for the sake of taking a trade every day, I did live price examples, a 2 to 3 time return on investment is a solid trade. What we're seeing now, I've moved the stop loss lower, right? Why keep the risk where it's at up here, which is where it was initially. I've reduced the risk to the high of the inefficiency that I entered the trade on. Because my mindset there is we've gone into the weekend. Sometimes there's a gap opening when a new week starts. We see that here, a gap lower, but immediately, rallied higher here. Found ourselves in the consolidation right in this same range and very close to stopping this trade out. So I'm not really that much concerned with this. To be honest, I'm actually going to remove this stuff for now so that it's not in the way. My focus is on what is price showing me today. My area of sell side, you already see marked up here at 41.96 and 3/4. This area up here, where I was saying price, if it's to continue lower, specifically to this old daily inefficiency here, that it shouldn't trade above this range. So this range for buy side, what this range is my buy side for today. So I'm watching to see price respond at this level or at this level before I engage. It's a Monday. The only times I typically want to trade Monday is when I finally get to the point where I understand what conditions lead to Monday making a higher low of the week, so that I can potentially get into a trade set up on Monday, and then that trade have increasing return on investment as each individual day passes by. If I wanted to, and if I see opportunity, I can always size in more to that trade idea. But to be honest, I've mentioned this before in other videos. The target baseline that I'm looking to accomplish is 8% a month. 8% a month, no matter how many units, how much capital an account begins with, 8% a month, especially compounded, will double any account size, no matter how small, medium, or large that account size is. From a perspective of units and percents, 8% per month will yield 100% return on that investment by the end of the year. 6% a month compounded will yield 100% return on investment for any starting balance. So those are just some numbers to keep in mind. Now at this point, I'm just going to show one thing that I did like to see case for bulls over here on the right, the daily chart between Wednesday and Fridays, right? High and low. Thursday was pretty aggressive. Friday was not able to retrace and stop it from creating this inefficiency here. So there is absent of sales or sell orders being taken into the marketplace here. As you can see, it was just a lot of buy side was attacked here. It opened with a gap lower into this inefficiency, and look at how price responded. So just one area of concern for me is possibly these are the conditions for that Monday low of the week or high of the week. If it was vice versa and it was flipped, just consider this was flipped, right? This was an inefficiency above price. It opened up with a gap higher and it had been trading lower ever since then. But this is what we have, right? Is price has been trading higher. There's a daily inefficiency. Price gaps down into that inefficiency and rallies from there to start the week. And so I wouldn't be upset if Monday creates the low of the week here and it reaches the objectives that I'm looking for the S&P to get to before I think about taking any like short or intermediate term sales. Because the next sale that I really get in, I don't want it to be a scalp. And that's again just me projecting into my overall outlook on what's possible over the next couple of weeks, right? Going into summer, I wouldn't be surprised if we saw lower prices and they start to turn around and start to attack sell side. All of the stop losses of those individuals who have been buying, and I believe their stop losses will be on the agenda at some point in the near future. And so, with that, I believe that explains the bulk of it. I've already given out levels on the dollar and the review and outlook posted the shortest one ever, and that was obviously because I was doing live examples throughout the week, so I didn't really have to go into too much detail in the review, and the outlook was pretty self-explanatory. So this is just the dollar so far, how it was reacting off some of those levels. We had the weekly opening, traded down below April's high, below these lows in here, run higher, clear the buy side here, back down to that April high. No bodies were able to close on or below. So rejection higher currently trading through that weekly opening price. But ultimately a consolidation, which is great. This is what I wanted to see from the dollar. The dollar consolidates before it takes off higher. That will give time for the indices to reach their objectives. And then once they reach their objectives and the dollar starts lifting off, they should be able to then start to slip lower. And so that's just my 2 cents. And so at this point, I'm going to go silent. You know the drill. I don't want to have you all subject to watching paint dry as I'm waiting for a setup to form. So I'm going to stop talking here. And then the next time you hear me talk will be over the sped up price, the sped up price feed. I recorded over a compressed about an hour long price action in about 5 minutes. So as always, please make sure to pause the video and read the notes that I type if it's moving too fast. But as far as the setup, I did end up taking a paper trade. Nothing I would consider high probability at all. Just wanted to make sure that if there's anything at all, I can at least at the bare minimum take a paper trade. There's no financial risk applied with paper trades. So it's just good practice and good gathering of intel as far as qualifying or disqualifying certain things as good conditions to even be looking to engage. Bottom left there, I'm typing it up, but that was that paper trade from Friday being stopped out. That pink shaded area I mentioned in the first part of the video, but that's the buy side for this morning. So as it's now traded above that yellow shaded area, I'm watching to see, okay, how does it respond if it's able to get into that pink shaded area or above. So at this point, it's looking like it may just keep going. Got very aggressive there with the 830 equities open. And now what I'm thinking here is because that's a 15-minute inefficiency, I want to see how the 15-minute closes in respect to it. As you can see right there, the 15-minute did close below. But like I said, just for the sake of it, I want to be able to take trades and show what it's like to qualify a setup. And I'm also just letting it be known whether I believe it's high or low probability. Today was not something that I considered high probability. There's no news. We had a large range expansion last week. And so a consolidation week in a dollar is what I'm anticipating. When the dollar is consolidating, though, it can make things very tricky with risk assets like the US stock indices because any sort of rally to highs could send price lower and any type of, drop down into lows could send price higher in the indices. And what's going on here is the dollar was rejecting around the same, areas within that range and trading lower. Then all of a sudden, it picked up strength and it starts to run higher towards the high that it had just created intraday. At that same time, the weakness started to appear in SPX and up there at the top in blue letters about what I'm thinking when buy side is engaged. So number two was what occurred today. There were reasons to go lower And the sign of the reversal potentially could have been the 15-minute closing outside of that range with that large wick at the top. And also, just keeping in mind that it's a Monday. There's no news today. There's news every other day this week. So for a Monday to trade sideways ultimately makes a lot of sense. Just create a range, an initial range for the week, and then I'll be able to play off of that range going into Tuesday, Wednesday, Thursday, and potentially Friday if I see reason to engage the markets or even attempt to engage with the markets on Friday. And right here, as the recording is going to wrap up in less than a minute now, just showing those individual ranges on the 5 minute that were of importance to me with today's price action. And there was no reason to take any additional entries. Just wanted to let it play out until about 9:30 and see what could potentially happen within that time span. But shout out to believers. Shout out to all the homies that inspire me to get better each and every day. I'll catch y'all in the next one. Peace.